Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Andy Baehr, head of product at CoinDesk Indices, and Elliot Chun, partner at Architect Partners. We're here to discuss what catalysts are impacting the top performers in crypto and momentum outlook. It is great to have the both of you with us. Welcome back to Trade Talks. Andy, kind of a big year in 2024. A lot of things we were waiting for kind of were executed on.
In retrospect, you can see Bitcoin had some OKRs this year, right? It had 4 big OKRs. It had to get the ETFs launched, which it did on January 11th. It had to deal with its halving, and the halving brought on an all-time high in that kind of time frame, mid-March. It had to kind of hang on until the Fed started easing, right? That sort of long period of higher interest rates was starting to ease, and it got through that on September 18th. And then the election came in and helped satisfy the last OKR, which was to hang on until there was a better outlook for a regulatory framework. So boom, 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 green checks on all those 4. And then yesterday we got the kind of the 5th bonus OKR of an options market on ETFs launching with tremendous volume and interest, and a lot of X debate about what the options are going to do to the price and volatility of Bitcoin. So it's been pretty solid, and it's another all-time high just this morning.
Yeah, why is the options market significant? Does it add another institutional tool for asset managers to manage?
There's one of the things that drew me and a lot of my colleagues into crypto was the fact that there was a lot of global markets activity offshore already, right? The crypto native options and swaps and prime brokerage markets have been going on now for a couple of years now, a couple of decades in traditional years, as we were saying before we started. So to have those available onshore to US investors in a very convenient format in a way that banks can participate right away is important. Remember that sometimes an options market can deal in notional sizes that are multiples, 5, 10, 20 times as big as the underlying asset. So if there are 5% of all Bitcoin are in US ETFs right now, and you take 5, 10, 20 times that much liquidity moving around in the options market, it creates a pretty significant force in how the price of Bitcoin can behave.
Yeah, and when this space matures, Elliot, we saw the reaction that it had after the Trump administration was elected. The market reaction was really quite strong, and it seems as if, yes, we had the ETFs, we had the options product being developed around this, but having that regulatory framework so that the US can participate within an economy at scale kind of brings this whole thing together. And my point to that is, it lends to what you're saying about crypto has surpassed the internet for the first time. If all these forces all come together, you're looking at the next iteration.
Yeah, it's really exciting. And just to piggyback on what Andy was saying, I think one of the biggest headlines is new market participants, right? And I think the asset classes and the way that people can involve and participate in owning and participating with Bitcoin and crypto more broadly has shown in our 2024 performance that we just have a whole new set of people that weren't participating, both retail and institutional side, particularly on the derivatives.
Yep.
Now, what does that mean kind of stepping back broadly? We've tried to come up with research that answers the question, how much value has crypto as an industry created? Which is an important thing that we need to answer when we look back and say, what are we actually really doing here? Second part is, how do we ground that to another emerging technology? And we took the internet. So going back to '94, when investment started coming into the internet, and 2016, when investment started coming into crypto as an industry, we mapped that side by side, and what was great to see was in Q2 of 2024, earlier this year, was the first time that crypto's value created surpassed the internet. And that is such a monumental mark for a number of reasons. One, we were coming out of a pretty difficult crypto winter time in 22. I called it the Great Purge. And then, what was some sort of event or time marking that we can say, hey, we've transitioned to the new phase. We've now passed the crypto winter or the Great Purge, and now we've entered a new phase. I like to call it the Great Surge. And what's at stake from here? If you take the 2002 equivalent of the internet to 2018, that's 18 trillion in value created. Big, big numbers. We just passed that mark for crypto, and we think we're going to get 18 trillion faster than it took the internet to get there.
When you talk about placing a value, what were some of the metrics that were considered?
Well, crypto is very unique because you have to have equity value plus token value. And so when we first ran the report at the beginning of, at the end of 23, things like meme coins didn't exist, and the ETF didn't exist, which is fascinating. We were talking earlier about how fast crypto as an industry moves. We call it the velocity of innovation. These things didn't exist a year ago, and now sitting here in November 2024, we get the benefit of looking back at how these things impacted crypto's value creation. And when we update the numbers in December, it's going to be even more impressive because we did not include, this last run up this last half of the year.
Is it a broad-based move that you're seeing, or is it certain spots?
For sure. Just to illustrate the move since Election Day, the CoinDesk 20 index, with broad-based index, was up. Let's see. Let me get my glasses because 54.54% since the 4 p.m. time on November 4th, before Election Day. That's up compared to 40% for Bitcoin. So that's really the first time that the rest of the market is pulling Bitcoin higher. You have layer one names. You have names like Hedera, like Chainlink. Not only the ones that many people know about, like Solana, but all through the index, you've had a lot of participation. A lot of those are banking on the fact that those blockchains and those service providers that help those blockchains, Uniswap, the DeFi community, they're going to have more things to do. That more things to do points to new projects. The new projects points to a regulatory framework that's going to allow the skilled people who are putting those new projects together to be able to launch with confidence, knowing how they're going to be regulated. The tokenomics of these businesses are important. People say, I love blockchain, but I don't like crypto. You need an incentive structure for blockchain. Blockchain has to be paid for. It has to be paid for natively, and tokens are the right way to do that, the best way to do that. So you need all these pieces to be in place to have this sort of internet or mobile technology-like transformation to occur. Yeah. So getting that first kind of peak that we're going to have at least some more regulatory pavement on the ground is radiating all the way up from brand new projects, all the way through these big CoinDesk 20 names, all the way through the index level.
Yeah, it's so interesting, Elliot, because we've been covering this since 2018, which is kind of a long time in the digital asset space. The word user experience with everyone that we have interviewed has been, if you look at those graphs with the bubbles, like that was one of the #1 bubbles, right? Between interoperability, integration, and user experience. So, to me, that's another sign that it's maturing. When you think about, removing those outliers or what M&A looks like going forward, is there still more room to grow? What do you expect in terms of how this industry looks from participants?
It looks rosy. We say green lights flashing for the first time in a little while. We try to be optimistic about our industry, but given we've been around since 18, we've understood the cycles can be very volatile, but they also can be vicious, particularly when you're passionate about the space and about the different things that are going on. Where are we sitting in M&A now? It's actually one thing, and you're talking about the tokens. What people don't realize is that when you're a founder and executive team and you take $1 of investor capital, you're going to have 4 outcomes from that. 1, your company is going to go to 0, doesn't succeed. Second, your company is going to be a zombie company, i.e. your valuation is too high and doesn't support based upon the metrics of your business. Third is IPO, and we have a handful of those, maybe 10, and throughout all of crypto that have a profile that can support a proper IPO. Regular way listing. And the last part is mergers and acquisitions. And so when you're staring at those 4 options, knowing our industry, it's obvious that M&A is going to be the most likely outcome for so many of the companies that have grown in crypto and are building products and services. And there's a couple of themes that are driving that today. One is expansion of products, right? CoinDesk, Indices has made a recent acquisition that have helped bolster their products and services. You're also going to have geographic expansion because now we don't have anyone that is the global leader in X. And those are all steps that are required for kind of that third IPO regular way process to grow. So we think that M&A is just getting started. Last week there was actually 8 M&A transactions. It was the first time that we had that many in 1 week in 21 months.
Yeah.
And last thing to note, we're the Stripe acquisition of Bridge. It is the most important M&A transaction in crypto, full stop. From a bridge transaction, i.e., not to pun intended there, it's a non-crypto company acquiring a crypto company. That's huge, particularly when we talk about new users and adoption. And then second, valuation, 1.1 billion. That is the largest announced transaction value that we've had. And then the third part is Stripe was likely playing a little bit of offense by defense. Bridge had a very similar model to Stripe, and so one would ask, well, why wouldn't Stripe just build it on their own, right? They did it because they wanted to take that opportunity away from other potential acquirers.
Right. Well, I mean, sometimes growth by acquisition versus organic is just going to make more operational sense and economic sense. At the end of the day, perhaps, why reinvent the wheel when you can, acquire the technology and the talent and then just improve upon it from there. But it's interesting, Andy, we're hearing a lot of the same terminology that we hear in traditional finance, right?
We're just thinking, this feels like after 99, tech correction and then build back, acquisitions, roll-ups, picking up the pieces, coming back stronger with more maturity and better investor participation. Totally feels like that.
It feels like it. I mean, Elliot, in your notes you pointed out professionalism, risk management, ethical behavior, doing the right thing for the space. Yeah. We saw this happen after the 90s and the internet.com boom and bust.
That's right. No, completely. And some of the products that came out of that from the indexing side is what we're modeling our products on now. We love the idea of how QQQ was started as a liquidity engine for all those names when volatility was high, but became a really good investor tool to relieve people from having to learn what 100 Nasdaq stocks do and pick their top 5 favorites, right? And just exposure to the space was important. For all of the trends that you're talking about and for all of the different outcomes and life-changing things that blockchain technology can do, most 5%ers, right? The investors who are going to only ever spend 5% of their investment time thinking about crypto are not going to go through 100 names and figure out which to pick, nor should they. They ask you, they ask me, right? We say the same advice you'd give to somebody who wanted to find the next 10 to 1, stock. You say, hang on a second, either dive deep or you have to sort of have diversification on your side. So for the investor side, especially for the 5%ers, we think that's right. We think that's part of the reason why Ether ETFs haven't quite found the momentum that Bitcoin ETFs have. People maybe don't see the whole value proposition of Ether. They understand it has competition. There's a staking layer. It's complicated. What if it's the wrong one? What's Solana? What's Sui? That is enough hesitation to pull somebody out of the space. And of course, the other big thing about the 5%ers is they're going to look at these all-time highs in Bitcoin and think, I'm too late. And of course, you're neither too late nor too early to learn. You're certainly not too late to participate in the growth side of blockchain technology.
But that's why the layer of complexity and all the different, if we just take layer 1 blockchains, I mean, we're in this every single day, and I would be very challenged to tell you exactly what the difference is between these chains are. And many times the metrics that we use, like things like TVL, total value locked, aren't the greatest metrics to show usability of a chain. And so when you think about what CoinDesk Indices, Andy, and what you guys are building, it is absolutely the next step towards bringing in those next billion users, it's an overused term, but the next billion users into our environment so they can participate, because many don't want to hold it. Self-custody is, I think the ETF showed us, is something that many don't want to do, nor should they, including probably some of us on this panel here. And you're giving them a way to participate safely in a way that is diversified and in a way that allows them to have confidence in a brand name like CoinDesk to say, hey, they're watching it, they're paying attention, and I feel good that I can participate with confidence.
It's so funny you mentioned that. I'll make a confession. We did an ETF launch with a partner with GlobalX last year, and we've all purchased tokens and we all have ledger wallets at home and we all do our, I went in and bought the ETF on its launch day, and it felt super different, right? It was much easier to take a big chunk of money and say, this is in my brokerage account and I'm going to stick it here and it's going to settle and it's going to be in my account. And as much as I trust blockchain and I trust my wallet, even for someone familiar with that, it's easy to take a big chunk of money and put it into an ETF. So no shame in ETF buying. especially for folks who are only going to be doing it part of the time.
I also think too, it's a younger asset class, and perhaps the nuances aren't understood that well. When you're talking about the different layer ones, it would be like asking someone, okay, out of all the stocks in the semiconductor space,
right,
what are the differences? What are the nuances? Why am I buying, in Nvidia versus another company and so forth? Everything removed from what you hear in the financial media news cycle.
right.
But what is the difference between all these layer ones and the service providers and so forth? It's just. And I also think from...
Who had NVIDIA on their bingo card 10 years ago, right?
Exactly.
It
or
wasn't
even
necessarily.
Who had the move this year? And tier 4 OKRs before, I don't think everyone had that. We weren't talking about Bitcoin or digital assets from a policy perspective this year at all. Until this year, excuse me. And that's the whole point. We're still learning about this space, and there are nuances just like there are with equities. They're just valued and looked at in a different way, and I also think we take a very Western U.S. centric view, and not understanding definitely how this is the building blocks of the digital market infrastructure. And we think about it, okay, how much is Bitcoin today? How much is this ETF up? How can I trade options around it? But we're not as much engaged with the infrastructure part of it, right?
Well, that's one of the things that we're lucky to be able to do, particularly with crypto and digital assets, because it is such a global movement. And we do get to travel to places like in LATAM and Europe, Eastern Europe and Southeast Asia. These are areas generally that nobody had the ability to buy NVIDIA or Apple or Google or Amazon or anyone else. They just were not able to participate in US capital markets. Enter a new technology like blockchain that has built a new digital global market that they can now participate in these assets. This is where the energy is really coming from and where the adoption is coming from, whether or not you're using it for a speculative price use case or you're using it as a store of value, if you're in a highly volatile local currency, or as a payment mechanism. I mean, you talk with, we sit here and say US dollar to every other country. Well, what happens if you're in Argentina paying someone in the Philippines? Like now you're talking about, so that energy is very, it's real, but for us sitting here in New York and the States, it isn't as top of mind as it should be, but it does represent one of the most exciting growth parts of our industry, because it is global and it is inclusive.
I talked to the regulators in those regions, and they've set up, many of them, virtual asset regulatory authorities that have, they're not pushovers, but they're dedicated to the work, and they've laid out pavement for years now.
I mean, if you even think bigger picture, because of cross-border payments and what this facilitates, you are growing these micro local economies. And what is, even in the traditional finance space, what are we always thinking of? What's the next hot emerging markets? Well, it's in LATAM, it is Africa, it is other areas of Asia, perhaps Southeast Asia, which has already adopted it. That's where the new growth is. So I think it would behoove us in the U.S. capital markets to pay attention to that as this continues to. You're looking at at least 2 billion consumers, right? But the flip side of that too is, and we spoke about this at the Singapore FinTech Festival on a panel. Yes, that regulatory framework is being developed in Hong Kong, ASEAN, EU, other areas of the world. The catalyst is the U.S. developing a framework, because this is the economy at scale. So I really think that's what the space is looking forward to in a good way, not just from a trading perspective, but to, I think you're thinking about the next iteration of what economic and capital formation looks like.
And just a comment on how powerful the US consumer is and the long reach of our regulatory arm. I mean, even though a significant number of innovators have moved overseas into these regions that we're talking about, many are still very, very scared because they don't want to have a US consumer that VPN'd and were accessed their token and then something bad happened. So while there are regulatory regimes that are forming and have attracted talent and have attracted investment into that region, a lot of groups are like, we still need the US to get their stuff together so that we can start engaging with that consumer. And if the elections and their election promises, so we have to be measured in our excitement around it, but if we get a third of what was said, now, particularly from a market participation, you have no more reasons why a financial institution does not participate in what is being built today. The biggest hurdle has now been removed. And that means from people buying CoinDesk indices to M&A occurring. You have people that were taking career risk. And now that career risk will be ideally removed in the coming time, because we have regulatory clarity, and as long as we're operating within the framework, we can now get involved with confidence, and that's just going to lead to a much more robust environment.
All right, and we'll leave it on a positive note. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.